Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to be looking at the continuation from yesterday in terms of the development of the price as it's been coming down in this channel that I showed you yesterday on the 1 hour chart, and why we will probably with a high degree of probability get rejected in this region here. I'll also be looking at the larger time frame on the monthly chart to see exactly what's developing there so that we've got the bigger picture of what's going on. In the short term, people get sucked into the emotions, not realizing that there is a different picture developing on the larger time frames. So we'll have a look at that. But before we start, just a normal polite reminder, please remember all my videos are for educational purposes only. Nothing should be taken as financial advice. So please do your wider research before you make any important investment decisions. So with that out of the way, I'm going to go straight into this 1 hour chart, because yesterday I think the price was around here, and I was saying that the price has been meandering and got very good support down here, and the chances are we're going to be going towards the top here and then challenging this top resistant line here. Obviously we've broken out of that, and the next challenge is going to be this resistant point that I pointed out yesterday. And as I keep saying to people who seem to jump on to any breakage of a diagonal trend line, this is not where you want to buy. Of course, if you did buy there, that's as much as your profit's going to be there. But if you're looking for confirmation of a proper breakout from this channel here, it's always best to wait for a horizontal break, which is here at the $39,500 mark. Once we get above that, and that's basically this big wick here, if we have a look closely, you'll see that there's a wick there right at the top of this trend line, and that is exactly at 39,500. So to confirm this proper breakout, you really need to get above this line here. And certainly I'm expecting a heavy rejection at this point, and if we do manage to get above it, then more than likely with a high degree of probability we're going to get rejected there. The reason being that since we broke down recently here, we haven't really challenged the 40,000 yet. So having come down to these levels at 36, this is our first proper challenge to 40,000 in the last few days. And usually on the first challenge of a key resistant line like this, there is a higher probability to get rejected here, and it depends on what Bitcoin does after that. It has a decision to make. If it does go back above the 40, then basically I'll be jumping on board here. But if it gets rejected here, then I'll be waiting for accumulation for a swing trade down at these levels down there. For me, it's always the Bitcoin price levels that make the decision for me. And I find just remaining neutral is always the best policy and not get sucked into the emotion of it. So for me currently, these are the two levels. At 40, if we get above that, then I do a swing trade from there to higher levels. And if it gets rejected here, then I basically wait until it meanders down to these levels here around about the $32,000 to $34,000 mark. So we'll just have to wait and see what happens. And if we zoom out on the daily chart, we've drawn this diagonal line here, this trend line that's been going since the $69,000 mark that we topped out at that point in November. And since then, we made lower highs here, lower highs there, and along the way here. When we broke out over here, we broke out of this channel and broke this very strong trend line at the $40,000 mark here. That was the time to jump on board to ride it to the next level, which was at 45, 46, which I'd mentioned in many of my previous videos. The interesting thing with this trend line is that once we broke out of it here, then a classic pattern develops whereby we break out of this, get rejected at a strong horizontal point like we did here, and then after that there seems to be a high propensity to come back and retest that same trend line somewhere down here. And this is exactly what's happened with Bitcoin. We broke out of it here, came to the next strong resistance point here at the $46,000 mark, having passed the key level of 40,000, but this relief rally was obviously not strong enough to take it above that level. So what we've done is made a classic move to come back and cascade down. So remember, this is the dominant trend here, and we're still part of this dominant trend. So despite having a little bit more of a relief rally in the last 24 hours, where we've gone from about 36,000 to 39,000, for me the trajectory is still heading to these levels here in this region of around about 32 to 34,000. We'll have to wait and see, but certainly this trend line seems to be playing a very relevant and important role for the price of Bitcoin. And this part of the trend line, to me, seems to be acting as a bit of a magnet to bring this price down and to at least have a rendezvous down here. And lurking below that is the $30,000 mark support line from back in May, June, July here. So obviously, should we break this strong line here, then that's the next level to accumulate if that is what you're wanting to do. One very interesting trend line that I want you to be aware of, and it's one that I drew many weeks ago when we were forming this pattern here, the bump and run. I don't know if you remember it, but I did this bump and run pattern here, whereby we had this running phase, the bump phase, and then the run phase here. And for all intents and purposes, this pattern was basically playing out to do this. And I remember saying that when we broke out here, that classical patterns would normally come back and retest this trend line here before we move up, and that's exactly what happened. However, what nobody predicted was that we were going to top out over here. But now that we have, it's interesting that when you zoom out, something more sinister is developing here, because if you take this trend line and just extend it over here, there seems to be a very real possibility that the price where we're currently at here may well come and find support on this line, because this has been very relevant and important at these key points. These are 4 very important points here. And if you look at the current price, if it was to meander down here, it could quite easily come and find support at these levels here. And that would actually make sense, because if you look left here, to the left-hand side, where the price range is around about the 20,000, and just above it is 24,000, and I've mentioned these levels before. So depending on where the price comes in on this trend line, we could find that this level here could turn out to be strong support, or the one further down here at 20,000. So please keep that in mind. It's just a possibility that I'm bringing to your attention, so you got more information from which you can make good judgments on in the future. Currently, a lot of people are getting sucked into this little minor rally that we're having. But as traders, you always want confirmation of the move, either to the upside or downside. And currently, that's not what this current rally is doing, because you have to look at the major key support and resistance levels, and that is at 40,000. Should we get above the 40,000, then obviously that would be a point to actually jump on board. But until then, there's a very strong probability that we're going to get rejected at the $40,000 mark, if not earlier, at 39.5. We seem to have spent quite a lot of time below this level here at 46,000, because when we broke down here, if you take that zone from there to the bottom here, you can see that we've just been going in this zone for the last 50 days here. That's the 50 bars on this daily chart. But what this zone does do is, it tells us that should we get above this level here at 46, then you can draw this zone just above it to give you some sort of a ballpark figure of where we're heading once we get above the 46,000. If we clone this channel, so you can see we're heading towards the $63,000 mark, which is actually in confluence with the support and resistance around here. And conversely, if we were to break below it, and lo and behold, we'll be at the $24,000 mark here. Should we come and break this level here at the $30,000 mark? So let's wait and see, but these are developing very nicely, and only time will tell which way Bitcoin is going to go. Maybe if we have a look at the bigger picture, might give us a clue. And let's have a look at the monthly chart to see which way the market is heading on the bigger picture frame. On the bullish side, you can see quite clearly we're forming a W pattern, a double bottom with a higher low here and a higher high over here. So this picture would suggest, when you first look at it, that we're on to the bullish direction here. But you can see that the candle patterns that are developing are 3 black crows here, which is basically 3 red candles all in a line here, and that would suggest a very strong bearish pressure, which obviously we're aware of. We'll just have to wait and see how this current candle finishes at the end of this month. Currently it's showing as a bit of a shooting star or a gravestone doji candle, but this candle at the bottom of a trend like this is actually quite bullish, because the actual psychology of this candle actually plays out like this. What we have at the end of this bearish trend is the entry into the market of more bulls in the marketplace, which have pushed the price from these levels higher to these levels at the top of the wick. And while they've been pushed back down to these levels at the bottom of this candle here, however, we must recognize that those bulls now exist. There are people in the marketplace waiting to buy. And that was demonstrated by the fact that they pushed the price up here. So all of a sudden now, with the bears taking charge all the way down here, they've now got resistance from the bulls coming into the market at this point. And what we have developing potentially here is a morning star pattern. And the morning star pattern is where you get at the bottom of a trend, a big red candle followed by a small bodied candle, which is then followed by a big green candle over here. And once we break this top of the wick at this point at around about 48,000, this should then take off after that. Because a lot of people will be aware of this pattern here. And when they see this level being forced through, they will then enter the market. So you'll see a huge numbers of buyers entering at around about the $48,000 mark here. So that's the bullish case. And if we have a look at the exponential moving averages, basically what we've got is that the blue is the 8 exponential moving average, the yellow is the 21, and the white is the 34. And recently we've been moving in between the 8 and the 21. And we really need to find support on this yellow, which is the 21 here at 36,000. As you can see, we came right down to it yesterday and then bounced back up again. Should we lose the support of the 21, we're going to find ourselves drawn to this one here at 34, which is at exactly $30,000 mark. But once we get above the 8, and the 8 is a magical one here because the 8 is currently at about 44,200. So on the monthly chart, if we closed at the end of this month over the $45,000 mark, we could have a big rise to the upside. And the reason why I say that, if you look historically, once we managed to get above that blue line, like we did after the COVID situation, this is what happened. And previously here in the bear market in 2018, once we'd got above this blue line again here, we went all the way up to 14,000. And even before that, once we managed to get above this blue line here at the beginning of the previous bull market, if you look here, once we managed to get above it here, that was it. The 8 EMA then acts as a support until it falls below, and then we're into the bear market down there. So this 8 exponential moving average is extremely important. If you look at the RSI, when we came to the $64,000 mark here, the RSI was up at this point at around 92. And then at 69,000, the price made a higher high. But down here on the RSI, that was telling you a different picture. We were making a lower high. And hence there was this divergence, which now currently is playing out to the downside. And it may well be we've got a little bit more to go down here, because if this RSI is wanting to come below the 30, that may well pull the price down to those levels of around the $24,000 mark. And if we look at the MACD, I'm sure many other YouTubers have been showing this, that we've got a death cross here, which occurred last month. And this doesn't happen very often. I think it's only happened about 3 or 4 times in the last 12 years. And each time it's brought the price down. So we are basically on a downward trajectory, as we can see there. And if we have a look at the stochastic RSI, the momentum has fallen below the 20 level here, and we're still pointing downwards. And until this turns back up, it looks like there's further pressure to the downside here. So just coming back to the 1 hour chart, before I wrap up, we're currently in this relief rally here in the last 24 hours, and we seem to be aiming at this price here, and this is very strong support around here if you have a look on the left hand side, and I can see a heavy rejection at this point, and if not, then 40,000. So these are the 2 levels that I've got my mind on, and everybody has their own mind to make up on the current price action. Okay, so we'll leave it there. Hope you found value in that. If you did, then please do remember to like and subscribe and to turn on the notification bell. And if you have any comments, questions or suggestions, then please leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.